If we didn't see the US giving Huawei some kind of reprieve, could that be perceived by markets as an escalation in the trade war and as a result perhaps provide some downside risks for equities moving forward?
I think it would, because it would be another sort of chapter in sort of one step forward, sort of two step back in terms of the broader discussion between the United States and China. And that's really not what investors are looking for. Really, we've had now two sort of incidents, both in May and, if I remember correctly, in August, where we were told that we were very close to a deal, and in the last second, things fell apart. And that sort of is unfortunately giving rise to this feeling in markets that really maybe both sides are not that committed in 2019 to have a deal done. And I think really what's now happening is that markets are pushing forward that expectation because the list of issues is so long and so complex, including Huawei being on the top of there, that actually a deal is more likely to happen in 2020, which is really not what the market was looking for at the beginning of 2019.
Absolutely, and it goes so much further beyond just trade. It's also a currency war and really a battle for global supremacy and dominance between the US and China. How does that impact your trading strategy? How do you trade around it? Some say that a lot of the impact is already priced in, but others are also looking at the flow-on effects into supply chains, and they see real concerns here.
Yeah, so actually, paradoxically, what it means is that in terms of our equity strategy, really our only overweight at this point, and it's not a particularly substantial one really either, is to be overweight in US equities. They are the most defensive. They have the highest visibility in terms of the earnings outlook, the lowest volatility in terms of delivered earnings. Those kind of safety or defensive characteristics are what we think investors should be looking at in this current environment. So it's, be cautious, stay close to home. And in terms of if you're going to be taking on equity exposure, it should basically just be the US at this stage.